Alright guys, hello. What I'm going to talk to you about today is what happens when a market panics. So what does a market actually look like when it panics? How can you understand this? How can you profit from it? How can you trade these types of events? I'm going to use an example of the oil move that we saw on the 2nd of December, so a few days ago now. And this is a prime example of a panic move. Now, to try and understand anything like this, you've got to understand what's going on. Now, panics don't just start in the middle of nowhere. You know, think about a market that is trading sideways. Why does anybody need to suddenly panic in the way they're trading? They don't. So the panic comes at certain points. So this is not necessarily definable in terms of you being able to say at that point it will definitely panic. But you can look at a market and define a point where you think a panic could be likely. And this is exactly what we saw as oil dropped below 64.45. You got around about 200 tick drop in about 2 minutes. Huge movement, really, really fast. And that's part of the characteristics of a panic. Now, what essentially is happening is once you pass a certain point, and this is often more noticeable, more clear to the downside as people get forced out of long positions, is you get two traders, essentially, two types of traders. You get one, the traders who are long, who are forced out. These people have to sell. Their stops get hit, their stops automatically sell. This will then push the market lower and you get this kind of cascade of stops. More people get stopped out, which pushes more people offside. They get stopped out, and so on and so on and so on. You also get short time frame, what I call FOMO traders. People who are fearing missing this move. The move starts to accelerate away from them. And they start to think, oh no, it's going. I must get in. And they start to chase. And as they're doing that, what they're doing is they're chasing and following the market down. They can't get filled. And for anybody who's ever wondered, why is it that they always get filled at the low before a bounce? This is why. Because what happens is when you're chasing the market, people who are being forced to get out instantly. If they've got an automatic stop, it is hit immediately. There's no hesitation. There's no thought about trade. Hits. The people who are trying to execute the FOMO traders chasing this move down, they're always slightly hesitant. And I'm sure you've felt this. You kind of think, don't sell it just yet. Don't sell it just yet. And then eventually you feel that you can't not sell it and the market runs away. Now, what happens is the point where you can sell is the point where the market slows down enough for you to be able to hit. Now, if you're in a panic situation, that slowdown is almost instantly followed by a reversal, because the only people selling are forced sellers who, once they've sold, have no interest in selling again. And the FOMO sellers who are selling and once they've sold are now sitting there hoping the market keeps going. So you're in a situation where there's nobody going to sell on the bounce back, and the people buying on the bounce back are the FOMO sellers who've got themselves trapped into the lows. That's part of the characteristics of a panic. Now, a real extreme panic, and this oil one was one of those. You get much, much higher volume, and this is how you can feel that the panic is there. The market gets this surge of volume, and I'll show you the chart and I'll show you the ladder of this in a moment, where you can actually see this surge of volume, and then the reversal trade, you get less volume, but you see huge amount of delta. And I'll explain that as we get there. But essentially what that's showing you is that on the bounce, there is nobody selling. It is all buying on the bounce. So even though you've got lower total volume, you have more buying, because the fact that everyone, percentage wise, everyone is now a buyer. Now, that's what happens in the beginning of and then the reversal of any kind of panic move. Let's go and have a little look at this. I'll get the ladder up in a moment as well, and I'll show you one of our traders taking part of this trade on, and then that slowdown where the FOMO traders can get in and the almost instant rocket back up the page. Let's go and have a little look. Okay, so this is the oil move. What you've got there is on the left a 60-minute chart, on the right a 1-minute chart. Now the level to break is 64.45. So the market dips through this. This comes at the open. Now, don't get me wrong, and I'm sure there are some people thinking, well, was this really a panic because you had OPEC news at the same time? you did have OPEC news, but this is where news creates a larger move because it pushes the market over the edge essentially. So with the news, you get this push through 45, and on that push through 45, that's where the panic move starts. And it's the pace that you can see from the beginning of this move that gives you a clue that this is already a panic. The end of that move, where we get that instant bounce, look at the volume down there. You can see it on that 1 minute chart. We've traded over 8,000 contracts in 1 minute. Now, if you go back for the entirety of the last quarter, you cannot find another 1 minute candle with that much volume in it. That just illustrates how much was going on in this candle. And that's, when you're getting so much volume on a breakdown after 200 ticks, that's a prime example of where you're seeing panic coming into the market. What you then get is from that low, and the low is very hard to define. And yes, there was a level down there, but there was also a level 100 ticks higher at 63.50 as well. So you can't sort of say, oh, well, it was an easy buy, because it could have been an easy buy at 63.50. The problem is it wasn't, and it dropped another 100 ticks. So it's the instant bounce that illustrates the panic, that shows you the panic's over. Once the panic's over, then it's about looking for your entries to try and play this move back up. But this is what a panic looks like. Huge surge in volume, very, very fast move. 200 ticks in 3 minutes is enormous, even for oil. Very fast move, huge surge in volume, and then very quick reversal. And my point on the delta, if you look down here, volumes collapse, but the delta completely reverses the entirety of this move very, very quickly. And that's because all of that volume is created by buyers just hitting into any offers that are there to sell. Let's go and have a little look at the order flow side of it. And remember, if you like these kind of order flow videos, hit the notification button, hit like. There'll be many more of these coming up in future. Okay, so what we've got here now then is the ladder's recorded as this move actually happens. So if you look at what's going on, we're trading below 64 now. We've flicked back up towards 64.20. This is not yet the full panic, but what you can already see, the pace of this market. Look at oil compared to anything else around it, how fast this is already moving. So this is already showing you there's a lot of participation. People are very, very eager to get involved. And you can see this trader's short here. He's got out of one contract. He's still got one left. He's short for around about 64.70 on this. So looking all right, 120, 130 ticks on side. The market is still stabilized, so you're not quite into the panic phase yet, but volume is exceptionally high. So with that break, you're already thinking there's scope for movement here. There's the chance for the big move. Market's still rotating down. We're still not seeing this sort of surge of volume just yet. Now you start there, you get another little kick down and another kick down. You see we're now taking out 10, 20 ticks at a time. Volatility is much higher. We just traded 38s, 58s instantly. Off the page again, we're pushing through the low faster and faster. This is where you can feel that energy build up. You can see now that people are starting to panic. Any bounce, people sell and sell and sell. It's very, very fast. You're through that 63.50. If you look to a chart, there's very, very little below here until 62.50. Pace comes in again down towards $63. We stall there, start doing a little bit more volume. But still, it's relentless selling. It's very, very quick. It's not even allowed to bounce off the lows now. You saw before we were flicking up 20 ticks at a time. Now it's barely flicking up 2 or 3, maybe 5. And keep this pressure down, keep this pressure down. This is where those FOMO traders now, it's slowing down to a degree. They can hit it. You could sell it here. You're getting the chance. And instantly it turns on people. This is what happens. That's the end of the panic, because as that bounced away from 62.50, there's nobody there to sell. And you see there instantly, we've just looked at that 5 seconds and we've already bounced 60, 70 ticks from that level. Now, it's not to say you could buy 62.50 and that was the way to trade this. It's more about now that you've recognized this panic, you can now look at this as an opportunity to try and buy on any pullbacks. As the market starts to drop down, where does it stall? Where does it stall? Can you buy there? We see it keeps on dropping to around $63. This could be your point to buy. this could be your entry to take this trade on. And that's what you got to try and understand with a panic move. It's not about trying to buy the low, but once you've recognized the panic, you've seen the order flow, the characteristics, sort of pace and volume going into the market. That's the bit that then says, yep, you can take that trade on. So there you go, guys. That's what a panic move looks like. Don't assume that every move down is a panic and any fast move is a panic, but understand the characteristics of a real panic type move. Because when you see these, the reversals on them are very dramatic, very fast. Equally, if you're short, moving into a move like that, you can feel that velocity and energy building up. You're waiting for that flush down, and you have to accept that probably you are going to give up a fair few ticks off the low before you realize that that move is over. But that's part of trading. It's not about trying to get in or out at the low. It's about recognizing that the market has turned, and that's the bit that you're after. I'm going to wrap that one up there, guys. If you've liked this video, click the notification button, subscribe to our channel. There'll be many more like this, and we'll look at how to use these types of moves to actually perform a dip buy trade as well in future videos. Cheers, guys. We'll see you all soon.